Hello everyone, welcome back to the channel. In today's video I'm going to be explaining probably the most important topic that you'll learn in smart money, and it's the concept of liquidity. Today's video won't be giving you a strict rule-based strategy, but in tomorrow's video, I'll be talking about Wyckoff and how you can use that to get high probability entries with good risk reward. But this video is needed to lay the groundwork for the concept, and so you actually understand why you're trading it. So if you've ever been in a trade where you enter, put your stop loss where you think it should be, and then price goes in your direction a bit, just hits your stop loss and then shoots back into the take profit. This is because there's liquidity resting where your stop loss is, and so the institutions are placing their buy orders here and then taking the market up. So they're placing their buy or sell orders, if it's the other way around, where you place your stop loss. And once you understand this and actually understand the concept, it does change your trading a lot. This is probably the turning point for me when I understood liquidity. So there's different types of liquidity. I found this chart on USD JPY that I'm analysing at the moment. Kind of has a lot of them here. I mean, as all markets do, but I think this is quite a good example. So the first one is swing highs and swing lows. So key levels like up here, down there, up here, down there. There's going to be liquidity resting below these levels. You can always mark them up. This level is likely to get taken out at some point before it wants to go. Market wants to go up if it does, and this level is also quite likely to get taken out before the market comes back down. But still, these are areas to look at. So that's the first type of liquidity. The second one is trendline liquidity. If you know not good, but a common retail method is to mark up a trend line and kind of trade the bounces of it. But what this does is it builds up liquidity on the opposite side. I mean, I can just explain it a bit further. So if you think about it, if you're placing a buy order here, your stop loss is a sell order. So there's going to be sell orders kind of accumulating below this trend line. So if institutions want to push the market up, they're going to be wanting to buy. And so for them to buy, they have to be the equal amount of sell orders. So they're going to target the areas where there's the most sell orders so they can buy them all and take the market in the direction they want to. And that's why trend lines very often do get taken out a bit and then continue back up. Let's have a look back, see if that's happened anywhere. Maybe like here a bit. You can see trend line. The retail traders will mark up here. Price gets taken out. Absorbs a bit of liquidity, shoots back up, but then I guess something happened here, maybe news shot it back down, but then it did eventually continue back up again. But it does happen over and over again, and it's something to mark up, and it's a good thing to target. That's why I'm looking at this setup here to go short. Hopefully price will come back up here, and then there's going to be a lot of liquidity resting below this area here, so that's a good area to target, because that's where the institutions are going to want to push price. The next type of liquidity I have talked about in a previous video is the Asian liquidity. So there's going to be liquidity resting below Asian lows and above Asian highs, which you can see a good example here. The Asian high gets taken out, absorbs the liquidity above it, and then shoots down. Because there's a lot of, as I mentioned, buy orders above, which the institutions would like to take up by selling and then push the price down. It can be seen here as well. Asian liquidity gets grabbed before price shoots down. And that's why it's one of my rules for looking at order blocks. Ideally you want to be looking at an order block that has taken out the Asian liquidity, because it's a high probability zone, unlike this one, which has liquidity resting above it. The next form is equal lows and equal highs. So if you're a retail trader and you see a setup like this, a double bottom or a triple bottom even, then to retail traders this looks like a good buying opportunity. You think there's a lot of support at this level, but in actual fact what's happening is a lot of sell stop orders are being placed below this level, and so the institutions, if they want to buy and push price up, they're going to want to buy below this level, because that's all the liquidity is. And so support and resistance does work in like trading ranges, but it does get broken a lot, and so there's a lot of liquidity resting below. Same with equal highs. And I'll just show you a setup on USD/JPY. Here, you can see if I just get rid of the Asian range, it's a bit clearer. See this high, this high, this high, this high, and this high, they're all kind of at the similar level. So there's going to be a lot of liquidity resting above this line, and as you can see, it's taken out a bit there, and then the institutions push it up further to take out any liquidity resting above there, and then price goes in the direction that they wanted it to. And you can tell liquidity has been absorbed by strong pushes in the market. So for example, there is a bit of liquidity resting below here. Price takes it out, shoots back up, it doesn't actually take off, and so I wouldn't call this a proper absorption of liquidity. But here, price takes the liquidity and then shoots down and doesn't come back. You can see the strong big candles leaving behind imbalance. So I'll just summarize here the types of liquidity that you can have. The first type we talked about was swing highs and swing lows. And then the second type was trendline liquidity. Third type, equal highs and equal lows. Fourth type, Asia highs and Asia lows. So these are the four types of liquidity that I look for. I'm going to just make a note of this. And something to mark up on your charts, even if you're not trading it like exclusively. It's just something to always look out for, because liquidity is what moves the market. And you can develop a rule-based strategy based on it, which I do actually use at the moment. I'm testing it on AUD USD, and it's working quite well. This trade's running quite nicely, but I'll keep you updated on how that's going. So I know this has been a short video, but just kind of wanted to introduce the topic of liquidity to you before tomorrow's video, where I go more in depth in the Wyckoff method. So make sure you watch that, because that will be more informative and actually give you a way to profit in the markets. Thanks for watching, and remember to like and subscribe if you enjoyed or learned anything.